Hey everyone, welcome back to the channel. Today, we need to talk about something big that just happened in the financial world. The US stock market took a serious tumble, and if you've been watching your portfolio, you've probably felt it. The major indexes, like the S&P 500 and the Dow Jones, were all deep in the red. But the real story, the epicenter of this earthquake, was the tech sector. The Nasdaq, which is packed with all the big tech names we know and love, got hit the hardest. We're talking about a significant sell-off that has a lot of people asking, what's going on? So, let's break down why this happened. It wasn't just one single thing, but a combination of factors that created a perfect storm. First up, inflation fears. Data came out showing that inflation is running hotter than expected. When prices for everything from gas to groceries go up, the Federal Reserve gets nervous. Their primary tool to fight inflation is raising interest rates. Higher interest rates make borrowing money more expensive for companies, which can slow down their growth. This is especially true for tech companies, many of which rely on borrowing to fund their rapid expansion and innovation. The mere hint of faster-than-expected rate hikes was enough to spook investors. Another huge piece of the puzzle is global uncertainty. We've got ongoing geopolitical tensions and supply chain issues that just won't quit. These problems create a ripple effect across the global economy. For U.S. tech giants that operate worldwide, this means potential disruptions to their manufacturing, shipping, and international sales. When there's instability in the world, investors tend to move their money out of what they see as riskier assets, like growth-oriented tech stocks, and into safer havens. It's a classic risk-off move, and tech stocks were right in the firing line. And let's not forget about company earnings. We're in the middle of earnings season, and while some companies have reported strong results, others have offered cautious or even disappointing forecasts for the future. A few major tech players warned about slowing growth, citing everything from changing consumer habits to new regulations. When a big-name company lowers its guidance, it doesn't just affect its own stock price, it can drag down the entire sector as investors worry that the same challenges will affect other similar companies. This creates a domino effect, leading to the widespread sell-off we just witnessed. So, what does this mean for you, the everyday investor? First of all, don't panic. Market downturns are a normal, albeit stressful, part of investing. Volatility is the price of admission for the long-term returns that the stock market can offer. It's really easy to get caught up in the day-to-day headlines and feel the urge to sell everything. But history has shown that reacting emotionally to market swings is often a losing strategy. The people who tend to do well over the long run are those who have a solid plan and stick with it, even when things get rocky. This could also be a time to reassess your portfolio. Are you diversified enough? Having all your money in one sector, like tech, can lead to amazing gains when that sector is hot, but it also exposes you to significant risk when it cools off, as we're seeing now. Diversification across different sectors and asset classes can help smooth out the ride. It might also be an opportunity for those with a long-term horizon. When the market goes on sale, quality companies become cheaper to buy. It's about looking past the short-term noise and focusing on the fundamental strength of the businesses you're investing in. Look, nobody has a crystal ball. We don't know if this is a short-term dip or the start of a longer correction. But what we can do is stay informed, stay disciplined, and focus on our long-term financial goals. These moments of high volatility are true tests of an investor's mindset. It's a good time to review your strategy, make sure it still aligns with your goals and risk tolerance, and maybe even find some opportunities amid the chaos. That's all for today's market update. It's a lot to take in, I know. What are your thoughts on this market drop? Are you buying, selling, or holding steady? Let me know down in the comments. If you found this video helpful, please give it a thumbs up and subscribe for more content to help you navigate these crazy markets. Thanks for watching, and I'll see you in the next one.